Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Sheldon McIntyre on the line. He is the founder of 360 Virtual Advisor and a MarketFi maven. And you're in Chile, right? Is that where you're calling from?
Good morning, and yeah, I am in Chile, Santiago, Chile.
Yeah, and how's the weather? I don't want to ask, but how's the weather today?
It's actually cooled down a bit from in the middle of February when it was getting up to over 100 degrees Fahrenheit.
Oh, wow. Okay. All right. So
Yeah.
let's start market. S&Ps, new all-time high yesterday. We keep making new all-time highs. We keep making higher lows. Showing a little bit of weakness this morning. Sheldon, have we seen the top?
No, we haven't seen the top. It's impossible that we've seen the top at this point. I mean, when you look back in October, November, for example, we had 29 consecutive days where the S&P traded above the 5-day moving average, which actually broke the historical record of 27 days, I believe, in 1928 or 29. And it's interesting to note now that we've traded above the 5-day simple moving average again 16 of the last 7-day trading sessions on the S&P and the Nasdaq Composite. So clearly there's market momentum there. And
Oh,
also you have the breadth coming into play was ahead of price in terms of breaking out in new highs. Whether you look at it from the NYC or from the S&P 1500, which includes the S&P 500, the small cap 600, and the mid cap 400. So at this point, you definitely were not at the top. Do I think that we're due for a pullback? Absolutely. I think that we're staring at a negative momentum divergence, which means that the RSI is not confirming price on the monthly charts. So I suspect that we do see a pullback, but we're definitely not at the top yet.
okay. So still looking for value here in this market. Is there things that are breaking out to new highs that you're just going to ride the momentum train, or are there things pulling back that you're going to try and get on the cheap?
Well, I don't look to buy stocks pulling back. I'm very much the number one variable or metric that I look at when I'm screening for stocks is relative strength. And I want to see relative strength advancing for individual stocks, not declining. In terms of stocks, obviously, this week has been defined by a lot of smaller biotech companies, some of which I don't trade simply because the volume's not there and or the float's too small for me to get into, meaning that if it's below 20 million shares, the float, I tend to stay away from them. The intraday volatility is a little too much, and I don't think it's fair for clients to have stocks like that. In the larger biotech space, we were actually long PCYC, which we saw the nice pop yesterday on the news of perhaps being sold. I closed that trade yesterday around 220 or 221. Um, other
How come,
stocks that I'm
Sheldon?
looking at.
Sheldon, why did I mean if it's in play? I mean, was that a target that you had? I mean, just not a believer in the rumor. Why did you close that trade out?
Well, it met targets, number one. It also met sell rule in terms of the percentage above short-term moving averages. And third of all, when stocks get into play, we start talking about valuations. I really don't want to leave price fluctuating within the context of commentary coming out. Well, I prefer to take that profit, which was about over 20%, and rotate that into a new idea, which, for example, today I put out to clients 22 recommendations that are set up in constructive patterns.
Oh,
So that usually that's what I do when I'm not overly familiar with a company. That's what I will do.
yeah. Well, you hit your profit target. So, do you want to share a few of those 22 companies that have potential buy setups?
Yeah, well, JC was talking about LinkedIn. That's on my list. Love that stock. Here, a nice consolidation for the last 2 weeks. It's interesting to note that over the previous 2 weeks, it closed within less than 1% of the previous week. I think it's not quite a what they call a 3 weeks tight pattern because after the breakout, the following week was a little bit more than 1% from that close of the breakout week, but it's definitely tight. Volume declined considerably last week, which means there are no sellers even after this breakout. And I know it's gapping today. I have a pivot on it of, just want to make sure that I get this correct here. Just over $24, or sorry, not $24,
I'll buy it
over
there.
274.
So let's talk about this a little bit because I mean maybe you could teach me a lesson here. You know, I really have a hard time buying stocks that are breaking out like this. Now, if I would have been watching it intraday, I look at the consolidation. You know, maybe when it blows through the 270 level, I look at yesterday's high, 270 and change. Yesterday's high was 271.43. Yeah, buying it through there makes sense to me. But I mean, are you gonna buy this thing off the open, or do you try and get a pullback? Maybe closer to yesterday's high or the 270 level, or are you just not going to be picky about price? You're looking for 10, 20, 30 points out of this trade and get me in. And also, where would your stop be?
Well, it's coming out of an early stage base here after that, year plus consolidation. And when you take into consideration that, the tight price action here, the market's a little bit weak today. It is set to gap, but it hasn't hit the trigger. And the reason why I like to buy generally, I usually aim for about 10 to 15 cents above the high. So you would add, 15 cents on the high here. And that is a way of confirming that the demand's there. It's interesting to note that many times if you put 10 cents above the previous high, that sometimes, many times the stock doesn't actually hit that pivot and it'll pull back. So for me, it's a confirmation that there's demand there. And when you're talking about a $270 stock, if I give up half a point, I'm not worried about it. It just came out of a primary base or a first stage base. So I have no problem paying up for it. In terms of price target, I haven't set any yet simply because it hasn't broke out. I want to see what kind of demand that's there. If it does have escape velocity, then I'll start looking at, setting short, conservative, and more aggressive profit targets from there.
Okay, let's talk about the oil sector a little bit. Hope you can tune in tomorrow. I'm sure you'll have some great questions for our
Absolutely.
yeah for
I'm
our,
looking forward to that.
Oh, that's great. Brianna's been working very hard. We got Doug Cass, Dennis Gartman. We got a list of people that be discussing the market. And I've been looking at this crude oil chart here, and you had the low, the panic low, 44.26. You had your rally up to almost 55, and you're pulling back, and you're just chopping here in mid range. Now, I know you like to buy things when they're going up as opposed to being flat or going down here. Have any of the big oils or any of any of the drillers caught your attention?
It's actually interesting you bring that up because today I actually put OIH on the recommendation list. It is set up here, I think, as a short-term bottom, and there is the potential for it to rally from here, moving forward, perhaps up to 5 to 6 points from here, simply because of how oversold it is. In general, though, I think that when I approach situations like this where something has been beat down, I prefer to go and put my capital in the sector in general or the industry group in general, like an OIH. I don't want to expose myself to individual company risk, particularly when we've seen the magnitude of the decline in oil. And that's very much still in flux, a very fluid situation. And I don't think we've seen sort of the negative downgrades or et cetera associated to that sector play out completely. So I prefer to go broader, minimize the company risk, and just look for a short-term trade out of it. I'm definitely not something I'm going to hold longer term.
Okay, we got a couple symbols coming out of the chat from Robert here. Not sure if these are stocks that you cover. The first one, if you could just give a technical take on Grub, GRUB. If you don't follow it, could you just pull it up there on your chart at home and you see now you'd be a buyer of this thing. Grubhub, right?
Um, I'm not in it, but it has been on my watch list. I actually put it on my personal watch list back when you saw that initial break above 38.83. That means that there you can definitely see that the downtrend is broken, and I was looking for the consolidation. The problem is I didn't have any capital available to buy this breakout. I do like the story. It has been on my watch list for about 2 months now, though.
Okay, moving higher in the pre-market as well. Okay, here's another one for you. QLIK. Do you follow that
Yeah,
one?
I know. Yeah, it's not on my watch list. I see it here. Um, yeah, the software space is getting a little bit of price traction here. I see that it's got an early stage here, flat base. Um, it's only got an 81 relative strength. It looks like it could break out. You would need your RS rating in terms of the Market Smith RS rating to confirm price. Um, it's not a company that I have on my watch list simply because it doesn't meet my fundamentals. The return on equity is not there. The earnings growth is not there. The sales growth is not there.
Okay, yeah, I see a couple tops over 32 here. 32.01 yesterday, holding up a little bit in the pre-market. Also see a high that you just made recently at 32.27. A couple others above 32. So Rob Hood, you need a big day yesterday, 31 to 32. I think you need to hold that 32 to make another leg up here. We started the show talking about an old dog here, and J.C. Penney due to announce
Oh,
earnings after the close today. Is this something you swing trade, day trade, or no trade at all?
for me, it's a no trade. It's not something I would touch.
Okay, all right.
Sorry, I mean it's a pretty blunt answer, but it's not a
No,
stock
that's
that
what.
I would
Hey,
touch.
hey. I
Doesn't
mean,
meet my criteria.
you're following J.C. Pratt. Do you think you can say anything that would offend me? I mean, come on. Let's move on. Triple D. That's probably something you're avoiding too. Getting smacked after earnings. Any take
Is
on?
it? Yeah, it's not a stock I would touch either.
Okay. How about Mobley MBL? We better bring up some charts that are going the other way because I think
Yeah,
Sheldon's.
remember I said the primary metric I look at is relative strength. Here you're touching on the going the other way. No, that's not a stock I would touch either. It's just
Okay. All right.
not in my wheelhouse.
Okay. All right. Salesforce.com here trading up at a new all-time high off some good earnings here. Is this something that's on your radar?
Mm, yeah, I see that a big, huge, probably I guess 1 year long cup with handle. I'm not really comfortable with how that's shaped up, though. It's not a stock that I would touch. Let me just take a look at the industry group, though. There might be other stock. Yeah, I mean, for example, RUBI is a stock that's in the same industry group that I recommended. It gapped up yesterday on good earnings. Another one is PAYC, which was one that is a new issue, and also MANH, which is actually shaping a very tight consolidate continuation pattern right now. It is on my watch list. Those would be, as you can tell, more in line with what I do.
Okay, we're going to do something a little in between here. And IBM, the worst performing stock in the Dow the last 2 years, got a little boost from Mr. Buffett, adding to his position here. This stock has been not a good returner here. Big resistance just under the 165 level. You looking to buy this on a breakout?
No, I would. When I look at this coming off the lows, let's go back and look from around October, I believe October, November, where it's kind of went sideways and then had that final dip and up. If you take a look at the volume footprint there, it's the wrong way, meaning that when it's been falling, it's been on higher volume, and when it's rose over the previous 3 weeks, it's been so on declining volume. So obviously, at this point anyway, it just looks like a corrected bounce.
Okay, a stock that really hasn't been moving with the market. Google, good earnings. This thing's been stuck in a. I mean, you could call 500 to 550 here. You go back to the dailies here. You did have a little break under 500. That was in December, early January. But basically, this 550 to 550 trading range has been holding up since early November. Any takes on Google?
Yeah, I put it on my B watch list a couple days ago. I am watching it, see if it can. I'm looking at GOG here. I'm looking for it to get back above the 200-day. If it does that, then I become interested.
What's the
But
200
until
day? What's the 200 day in it?
on the GOG, I show it at 551.05.
Ooh, and then you made a high, you made a double top at 550 here. So good level to take a look at in Google. Will you look at it, if it doesn't get back above that 500 day, would you
No,
look at, or 200 day, would you look at it as a potential short?
no, it
Okay.
doesn't have the pattern. Basically, when I look at shorts, I actually flip the chart around upside down, and I look at it in terms of, is it consolidating like a cup with handle? Is it consolidating like a flat base, etc. And I want to see the 200-day at least flat to trending down. In terms of Google here, it just doesn't meet the criteria.
Okay, an old standby here, BlackBerry, been in a trading range forever, gets pops on rumors. Looked like it showed a little life yesterday. Is this something on your radar?
No, yeah, that's definitely not on my radar. I'm sure if I was a day trader, this is definitely a stock that I would be monitoring every single day. I mean, some of those daily or intraday moves are quite notable, but it's not a stock that I would follow or recommend.
Okay, another question from Rob Wood here. Is Market Smith a tool that Sheldon believes the novice can learn from?
It's my primary charting platform. Yeah, you can learn from it. Definitely, I think they are the cleanest charts out there. And what I like about them the most, though, is of course the proprietary rating, RS rating, the EPS rating, and the industry group ratings. And also, I like having that snapshot of the fundamental data, whether it's on the daily or the weekly chart. It's a way for you to really get synchronized with the company very quickly without having to rely on other sites or other services. So, yeah, I think you could learn from it. I would encourage you though to read the books of William O'Neill as a supplement to it, so you clearly understand, the proprietary indicators and where the platform's coming from.
Yeah, Dennis is just commenting here that, a lot of people subscribe to that method. You're buying strong stocks, selling weak stocks, and that's definitely worked over the last few years, but you never know when that trade's going to get too crowded as well. Well,
No, you're right. Yeah,
all right,
definitely.
Sheldon,
That's
we're going to wrap things up here at 9:19, and we're going to take our final break of the day. But Sheldon, as always, great having you on the show. Thanks a lot. We'll be talking to you soon.
You bet, Joel. Thanks for having me on.
Pretty good reception there coming from Chile, huh? We got some
He's
comments.
on Skype, so
Yeah.
of course he's gonna come back more clearly. Great guest too. Sheldon's always great to have on the show.
Okay, we're gonna go from we're gonna do the trifecta of great guests today because we have Greg Harmon coming on. He's CIO and partner at Presidium Capital and the founder of Dragonfly Capital. Be right back with Greg.